Hello, and welcome to Wealth is Possible, the show where we talk about personal finance and building wealth. We are your hosts, Vino, Vince, and Evan. We'll be discussing various methods of building wealth and growing your cash flow, including the stock market, real estate, cryptocurrency, and various business ventures. Pretty good, man. Pretty good. Glad to be back.
Episode number 4.
This is episode 4.
Episode 4, yep.
So episode 4, you guys may see there's a little bit of a layout change here.
Yeah.
So usually we got Mr. Vint hosting the show, but this time it's going to be a real estate based podcast.
Yeah.
So that's why I'm in the middle. Right?
Okay.
All right.
Let's get this going.
How you guys over there? You guys nice and comfortable over there?
Oh yeah.
Yeah.
Nice little change of scenery.
Yeah.
Okay. Sick, bro.
It's not always easy to get us in scene, but we're good.
we have a great director of.
Thank you.
Okay. Let's just dive right into it. How about that?
Yeah.
Okay. So we're gonna be doing things a little bit different this time.
Yeah.
Once again, we're talking about real estate.
Mm-hmm.
So we're gonna focus a little bit more on like real estate investing, just personal real estate as well.
Mm-hmm.
So we're just gonna dive right into it. I have a question for you guys.
Yeah.
Okay. So the question is, what are your thoughts on real estate investing, and what are your goals for real estate investing, and why?
All right, I guess I'll start.
I guess Vino's going first. He's raised his own hand and he answers his own questions. I like that. That's how it should be.
So, what are my thoughts on real estate investing? I think it's an amazing way to grow your money. Obviously, real estate is one of the asset classes that are one of the most safest asset classes out of there.
Mm-hmm.
When you compare it to like stocks and crypto, a lot of people love it because it's tangible. They can see it, they can feel it, they can live in it, they can rent it out.
Mm-hmm.
I think it's an amazing way to grow your money and in a safe way for sure. What was the second question there?
It's one question,
Mm-hmm.
but there's multiple parts. So what are your thoughts
Second
on
part.
real estate investing? I'll read out the whole question again for you.
Yeah.
What are your thoughts on real estate investing, and what are your goals for real estate investing? So what are your personal goals?
Yeah,
Whether
yeah. Okay,
it's
so-
up to you if you want to go short term or long term.
Yeah. I mean, in terms of my own personal goals, definitely want to build a portfolio.
Mm-hmm.
I'm not sure exactly how wide I want to build that portfolio.
Mm-hmm.
Whether it's 5 million, 10 million, 20 million, but I definitely want to start off and build that portfolio one step at a time. I personally don't have any real estate at the moment. I don't own any. I never did. I do want to get into the market sooner or later. Just obviously timing things out, and obviously we'll probably go into more of the strategy and later on and why I'm choosing to go in when I do go in and etc. Right?
What about like in terms of like personal real estate? I'm gonna get to you, Vince, in a second.
Mm-hmm.
What about in terms of personal real estate? Like I know you did mention that you don't have you're not holding any real estate right now. So how would you go about getting your first property? Like did you want to rent first? Did you want to own first?
Well,
like how did you want to do this?
At the moment, my plan is to if the first property that I would ever get would be a completely rental property.
Mm-hmm.
Whether
So you wouldn't live in it initially.
I wouldn't live in it initially.
Okay. Why is that?
Just personal choice. Like I have a pretty amazing situation. Where I live, I do love living at home with my parents at the moment. So I am taking advantage of that. So most likely, whether it's near or far, I would probably rent it out completely.
Mm-hmm.
When I do choose to move out of my parents' house, I would probably rent first. Yeah.
Would you do something like a long-term strategy or a short-term strategy, like Airbnb, or would you do kind of like a long-term tenancy?
Probably a mix of both if it's possible.
Okay. So ideally, you're looking at like a detached or a semi or whatever. Most likely like a duplex, maybe.
Yeah, most likely a detached duplex.
Okay. Cool. What about you, Vint?
So when I think about real estate, I get excited because I look at it as a place to park your capital that you can leverage when you need. It's something that is respected by the banks. If I were to park my capital in a piece of real estate, of course the appreciation and the potential cash flow is very attractive, but I mostly like the fact that you can leverage your property
Yes.
with a HELOC and a home
100%.
equity,
What's
a home equity line of credit.
Yeah.
Right, and you can pull out that money and you can do whatever you want with it. Essentially,
Yeah.
there is no restriction. Is there any restriction on the HELOC?
Honestly,
it's 80% loan to value.
It's
Yeah.
80%
of the time.
But in terms of what you can do with that money, is there a restriction?
No, you can do whatever you
it's
want.
Just, it's
Exactly.
just cash.
like any
It's
line of credit.
it's a loan, so it's tax free. But
Yes.
you know,
It is essentially a reward for owning property,
right? So another crazy thing is that I actually saw a house that was listed. This is completely off topic. I seen a house that was listed just to give you guys a little bit of power of real estate, especially in the Toronto market. I saw a house that was listed last year.
Yeah.
I forgot the exact figures, but I believe it was about to get closed for about 700,000.
Yeah.
And he or she took it off the market and they relisted again. So they put it up for sale again this year, and he sold it for 1.4 million.
So you're saying he last minute he decided not to sell?
Yes. So it looked like it's on the app. So I used the app called House-Hacking. Yeah. And it says that it was terminated, right? So I'm assuming that it didn't close, or maybe the client decided to take it off the market again. And sorry, it wasn't 700,000. It was 1 million that was supposed to close for.
Okay, yeah, because that's what I was gonna say. That's a
it's a
big
big
jump.
gap. Yeah, but even though at 1 million instead of 1 million, he closed at 1.4. It's actually down the street from
about 400,000 in 1 year, I guess, right?
400,000 in 1 year. So that's just the power of holding real estate, man. Like
100%.
especially in the markets happening right now. So it's pretty cool.
Yeah. The other thing I want to mention though, what Vince was saying is, it's crazy though, because you mentioned how you love real estate because you can leverage it, right? You know, maybe about a couple months ago I probably wouldn't be able to say this, but you know, even these days you can actually leverage crypto the same way. Even stocks probably can't really do anything with it like that, but in terms of crypto you actually can.
I mean, with stocks, you know, the bank offers you line of credits at favorable rates actually once you're
okay, so you can, but I mean,
it's not on the level of a HELOC where you get 80% loan to value, but the percentages will be lower, right? Even with crypto, like what is the percentage?
So with crypto, the loan to value isn't as high as 80%.
Exactly, stocks
because it's more
volatility.
Yeah, right. So like the actual example I was gonna bring up is Blockfi. I actually use Blockfi. I actually use the service as well.
We can probably provide a link for them down below. No,
we can probably
we'll probably have like a video explaining Blockfi, what it does and stuff.
Well, we'll probably have a link down there. You guys go check it out.
Yeah, for sure. So yeah, like the actual service that I was talking about was Blockfi, and in their platform you can put up your crypto as collateral. You can't put up any crypto. I think at the moment it's only Bitcoin, Ethereum, and USDT.
It's like the stable coins.
Only one stable coin. And then you can get a loan on that. But it would only be 50% loan to value. Not 80% like real estate. But it's still something. It still can help.
Is that loan? So you could get a loan, and could you also lend out your crypto? Is on the same platform you lend out your crypto?
So that
you're
one
pretty much
platform,
lending it to Blockfi.
It's two different.
So
services.
Blockfi has two services. You can put your crypto into an interest account where you're gonna be getting an interest
yield, right? You get a yield
on and holding
you get paid
it with
every
them.
month.
They're doing whatever with it. They're loaning it out. You're getting an interest.
How often is that paid? Like every month?
Every month.
Okay.
Yeah.
That's amazing.
I think it's about the rate also changes as well. It's usually between like 5% and 8% yearly APY. So that's one service, and then the getting a loan with your crypto as collateral is another service. So that's Blockfi's two main services. I don't think they really have any other services. So that's Blockfi for you. That's an amazing thing.
That's actually 2021. And that's actually very ties into real estate in the world of private lending versus a HELOC, right? It's the same concept, except it's in real estate, right?
Yeah, exactly. But there's only one downfall with the cryptocurrencies, that when the just say you gave in your Bitcoin, and then you took a loan against your Bitcoin using Blockfi. If the price of Bitcoin drops down a specific amount, they actually require you to pay up front.
100%. Yeah. So I can go into that a little bit more. I don't want to.
We'll do
probably
like
make another video.
Make a whole video
on Blockfi.
So obviously because of the volatility, once your loan to value that number drops below, starts getting closer to that 50% and drops below that 50%, you basically would need to put in more collateral.
Yeah.
Right. And it happens because crypto markets are super volatile. It has happened to me in the sense where I put in more collateral just to keep that collateral safe and keep that loan of value at 50%. Right. So, you know, it's not the smartest thing to put all your crypto up because, you know, anything can happen on the service as well, right?
Yeah.
So
unless you have like
risk,
extra, there's risk unless you have like liquid cash available too, because you're gonna, in those cases that the Bitcoin or Ethereum or USDT does drop, you're gonna want to you're gonna need to put down more money, right? You would need to basically buy more crypto and then fund that collateral. Yeah. You know which asset class doesn't require you to put more money down after? Yeah. Real estate. But I mean, I'm sure if the loan to value starts dropping, you probably would need to, right? That we gotta definitely the thing is that with real estate, the markets aren't volatile, so that doesn't really happen. Exactly. All right, Vince. So continuing on. So, what would be your first real estate purchase? I believe you were.
So I don't currently own any real estate right now. I ideally would want a detached house. Yeah. Location is not that important to me, like in terms of proximity to the city of Toronto. Yeah. But obviously it would have to be a good location, right? Yeah. But you know, I would be okay with a townhouse or a semi as well, if it's a little bit closer. But you know, I just want to get the most bang for my buck, right? Yeah. In terms of appreciation over time. Yeah. But yeah, so like, and then you know, eventually down the road, move into multifamily. Yeah. You know, and. You know, so you mentioned proximity to Toronto. Is that because you want to live in the property, or is this just for your? Well, yeah. So you know, I just want to be in the. I want to be in the position where, I don't necessarily have to rent out the property. I could live in it, or I could not live in it. Right. Yeah. So you know, I'm more not waiting, but I'm strategizing for the point of, being able to cover my monthly expense comfortably, and then so to a point where if I wanted to live in the property I could, and if not, I can rent it out and live somewhere else. But I want to always, you know, have that income in case of, you know, in case of any emergency, to deal with the property, to be able to cover all those expenses, right? So would you see yourself house hacking? So for those of you that don't know what house hacking means, house hacking is pretty much like, just say you buy like a regular house, upstairs and downstairs. So the basement is like a separate entrance, for example. You would essentially turn the basement into an Airbnb or a long-term rental. So you would have like another tenant inside, and that would kind of help cover all or some of the cost of your mortgage, which will overall make your overall living expenses a little bit cheaper. So that's just one form of house hacking for those of you that don't know. So back to you, Vinth. Yeah. So definitely I would, you know, at some point, if I lived in the basement unit, like if I wanted to move out and go rent a condo in the city, I would rent out the entire basement unit. So family would be upstairs, and then the basement that's kind of rented out, and then you would have a secondary property, probably with the equity from the initial property, right? Exactly. Yeah, down the road. Yeah, for sure. Gangster. Okay. Like what about you? Are you gonna be answering these as well, or? Yeah. Well, I have to, right? I'm kind of like, you know, kind of here as well, right? So, so real estate for me, man. Real estate is probably one of the safest asset classes. That's why I chose to represent it. And Canadian real estate is pretty interesting because, you know, it's not surprisingly, but it's booming. A lot of investors from like overseas. We have a lot of international business as well. I think it was about 7 or 8%, a lot less than what the media likes to portray it to be. But yeah, you know, there's the fact that we have a lot of international investors kind of shows you the potential for Canadian real estate. We are constantly always growing. We have one of the best immigration policies like in the world, I would say, because you know we were always bringing in immigrants left, right, and center. You know, all of our parents were immigrants. I think I'm not too sure, don't quote me on this, but I think it was around like 500,000 people are expected to come within the next few years. So if you guys are ever looking to purchase real estate, if you're ever thinking that one day the supply is going to short,
one day the demand's going to slow down. It's not. It's not going to slow down anytime
I think that's
soon.
something, you know, a lot of people probably do think about and worry about before they get into the market. I personally don't think demand would slow down at all.
If anything, we're super pressed. Even you know, like even with the tighter restrictions and stuff that's happening right now too, it's harder to get you a mortgage. Just say one of you guys were looking to buy a house right now, and just say you got pre-approved for like a semi-detached home. In a few months, with the way the real estate prices are going up right now, in a few months, you're probably not going to qualify for another semi-detached home. You're probably going to get bumped down to another, to a lower class, maybe even a townhouse. Exactly, right? Maybe even a condominium. So that's actually something that's going to be estimated for the 2022 market, because the interest rates are actually set to, well, I don't know when it's going to happen. Obviously, I don't have a crystal ball, but normally in situations like this, over time the interest rates don't usually stay as low as it is right now. So right now interest rates are like insanely low. Usually when the interest rates go back up, naturally it does mean that the price of the homes do tend to fix itself. But I think honestly, my personal prediction is that because of the supply and demand issue, I think it if anything, it'll have a very slight correction, but I feel like it's still going to trend upwards. But a lot of people are going to get priced out of their homes, right? So a lot of people are going to get dropped down to a lower asset class. So so I think the townhouse market and the condominium market is going to really boom next year.
Is there like, isn't it like only a marginal difference between like a semi and a detached, like in terms of price, like in terms of like, it's not like $500,000 in between, right
now, like on paper I would say, but in terms of just offers, I feel like the single it honestly just depends. Like the markets are always shifting, so it's
because
just
in terms of listings alone, like what I've seen is like, for example, like I'm talking like in the city, or like just outside of the city, not like too far east. Like I will see, you know, a semi go for like maybe 100,000 less than detached on a listing. The thing with the semis and the detached is very tricky because of such low inventory. It literally just depends on whatever's on the market. Right? So just say there's no there's no detached on the property on the market, and there's only like semis. The semi could command a detached value, right?
Exactly.
I guess it'll always boil down to that supply and demand, right?
Exactly. And then the way you're looking at things right now, it's whatever somebody's willing to pay is what your house is worth. There's no like set value anymore.
It's kind of like Top Shot we were talking about last week.
Or like NFTs or whatever, right?
You set the price.
Exactly. And it's crazy because it's crazy because you're seeing a lot of realtors. It's not just one realtor that's killing it right now. It's almost like everybody's killing it right now, and
it's hard to miss, right?
It's hard to miss right now, and you know, like almost every single realtor that I'm seeing online is getting the highest price on the street ever, which is
sold over asking.
Everything's sold over asking. If you drive around right now, you'll see that everything is sold over asking. But that's my whole thing with real estate. I think it's pretty cool. I think it's very, very easy, and simple and
safe,
known way to make money. I think most billionaires, they made a significant chunk of their money through real estate.
I remember I actually learned this from the M2M podcast. The highest percentage of millionaires came from real estate.
Right? And it's like, you know, it's easy. Well, it's not necessarily easy. It's not necessarily cheap, but it is something that you can live in. So the average person isn't going to go out of their way to make like you're not going to. The average person isn't going to save money and put into stocks or like a business or whatever. They're gonna
or a JPEG
or a JPEG, whatever, right? They're just gonna save their money. They're gonna save their money and invest into a home because they can live there, right? They're not doing anything out of the norm besides like obviously basic maintenance and shit. But it's a very versatile asset, right? That's what I like about it. Like you can live in it, you can rent it out, you can do an Airbnb business with it if like the zoning permits, right? Like there's a lot of different things that you can do in real estate. There's lots of different exit strategies and stuff, and I really like that when it comes to an investment. And worst case scenario, I can just go and live in it. Right?
For
and
sure.
Just say like, and then, you know, you do that for a few years, just say 5, 6, 7 years down the road, I want to change my asset classes. If I sell it, I made a shitload of money on top of the money that I just made. So it's just money.
Yeah. For me personally,
if you set it up correctly.
Yeah. Like, you know, I just want to have a good portion of my net worth of my assets in real estate. Right.
Yeah.
Like I don't necessarily, chase after real estate, in the sense of, you know, I need that to grow my wealth.
Yes.
There's many other ways to grow your wealth.
But
for a lot of people, real estate is like the number one and only way, because it requires, I guess, the least amount of hands-on, constant research and everything else. You got to kind of do a lot of legwork. Right. Where real estate, I guess your realtor is kind of doing that legwork for you, right?
That's why it's actually very important to get a realtor who's very
knowledgeable,
who knowledgeable about the like the market that you're investing in, or even has that investment background, right? So it's very important. Right. So I think for me, my big thing is I want to get, like, right now I don't really mind if I get it's whatever I get approved for initially, right? So there's going to be probably like another year or so before I enter into the real estate market myself.
Would you get a condo?
No, so for I would primarily,
if
I would,
like, if you know you'll get pre-approved for a condo, and that's like the only thing, hypothetically, would you go in, or would you wait?
Honestly, it really depends.
Because I've thought about that a lot.
Yeah, no, for sure.
Like, should I get a pre-construction, or should I wait and get a detached?
So it really depends, right? So it really depends. Like, I personally am not a big fan of condominiums.
Yeah, me neither.
For sure, right? Because of the condominium, like the condominium corporation, and like just how high the fees tend to go up. But honestly, like, you got to look into this thing called a status certificate. Once you request.
What's that?
So a status certificate is pretty much like, it's an informational document that has like all the numbers and stuff for your condominium. So just say that your condominium is coming up for major renovations, or like just say like it needs a new garage door, it needs to change all its windows, for example. You can, based off the status certificate, you can check to see what their reserve fund is like. So if the reserve fund is low and they don't have adequate funding, they can either increase your condominium fees significantly, or like within the regulatory standards, or they can even, if that's still not going to make a significant impact, you're literally going to have to cough up that extra money that they're going to have to use to make a repair or maintenance.
So what you're saying is, you don't really, as a owner of a condominium unit, you don't have the most control over the expenses. Is that what you're saying?
Over time, right?
Yes.
Do you have any input in terms of shutting that down? If they were to make a move, like, it's a board of directors.
It's a board of directors, but once again, like, if certain things have to be done, like if you need to do the roof, you're gonna have to do the roof.
Yeah. So it's not a democracy.
Yeah. Like it's
not really a democracy.
It primarily comes back to how it's managed. Yeah. Certain management companies are very reputable, and
I guess it depends on the fine print, right?
Yeah. No, like it's just primarily the management company. If they're financially inclined, then the numbers would make sense, right? But some condominiums, unfortunately, are an absolute shit show. So once again, you want to make sure you get like a realtor that knows his shit about the condominium markets, and does his research, checks the status certificate and all that stuff, right? Well, obviously, like
that's a good point though. A status certificate. I don't see anybody talking about that.
Yeah. If you guys want, you guys leave a comment down below. I'll make a more detailed video on the status certificate, and then that way
for anybody who's into condos,
anybody's looking to get into the condo market, and sometimes you might not even know if you're going to get into the condo market, right? You're not even going to know if you're going to get into the condo market. You might think that you want to buy a semi-detached, but based off real estate prices, you might get priced out and end up in a condominium. Pretty much in that situation, to answer your question, Vince, I think if I were to, because initially I wanted to house hack, because that's my primary thing that I'd go for. So I'd go as low as a townhouse, just so that I can have like a separate livable unit that I can rent,
like a townhouse with a basement.
A townhouse with a basement. Okay. So ideally, I would
townhouse
would be my lowest bet right now. Okay. Just temporarily.
So like, is it like, do you want to get into the real estate market to live in it, or do you want to rent it out? Or
it would be a both. So initially, like, I would do it to live in it. I would live on the upstairs floor, and I would turn the basement into an Airbnb. Obviously I have like my girlfriend who can help me manage that and stuff while she's doing her thing too. So it'd be a little bit easier for me. But if we find that it's kind of interfering, obviously it's based off time and reward. So if we find that we're having to be more hands on, then I'm gonna switch it into a long term rental and just pay the top, right? Because I'm a big fan of paying, like right now, like I pay rent right now, right? So all that money that I'm putting towards the rent, I'm not really getting it back. Obviously, I'm getting a portion back from like tax returns and stuff because I use it as in my office. But when I'm contributing like $600 or $700 or $800 towards my mortgage, I'm building equity, right? I'm actually I'm still investing.
You're paying down your loan and you're building equity.
Yes. That's kind of like what another positive. There's so many positives.
So many
real
positives,
estate, but just if you rent it out, your equity is getting paid down.
Exactly.
Like a lot of people will think, okay, there's no cash flow or whatever. Sure, but like your equity is getting paid down and it's not you.
Yeah.
Right. It's for the fact it's a benefit that you saved up that money and put that down payment. That's it. One of the benefits you receive is someone is renting that out, and you could think of it either as, oh, I got to be a landlord, or someone is paying down my mortgage for me, and I don't have to pay down my own mortgage.
Exactly.
Right.
And once again, if you have the right realtor who knows what he's doing and stuff, he or she is gonna find you the right kind of tenant that would match your lifestyle. Sometimes you can find a tenant that doesn't have a car. Just say you have multiple cars. There's lots of different ways to go about it. It's just good to know that there is a way
there is
to
that
get
option.
cheaper rent for house hacking or whatnot. You could do Airbnb. There's lots of different avenues that you can go, and sometimes Airbnb you can generate substantial income
for sure.
All right, so I just want to go back and get a little bit more into the whole house hacking thing, because house hacking is pretty big, man. Just being able to pay down your mortgage, having somebody else essentially help you to pay down your mortgage. Right, like, I think that's
pretty amazing.
Awesome,
I mean,
right? Even with the whole Airbnb opportunity, one of the things that I actually wanted to do, like just kind of help retire, like my parents, was get a property, have the basement renovated for Airbnb, and have them manage an Airbnb, right? So they can kind of stay at home, be retired.
Not really have an expense for their house.
Exactly.
Because
right?
the Airbnb is paying the mortgage.
Exactly, right? And when you do Airbnb correctly, you can generate some serious cash flow. Like you can potentially pay off your whole mortgage and have an extra couple $100 on top. So there's an income opportunity where you live, which is pretty awesome. And on top of that, you have equity growth.
Yes. Oh, speaking of Airbnb, that actually reminds me. There's this tweet I saw today about how Airbnb actually was created. I was gonna pull it up while you keep.
I actually watched the interview of the Airbnb creators not that long ago. It's very interesting.
No way. Okay.
Yeah, keep going. I'll pull it up and then. I'll
so while he's pulling that up on the Airbnb note, you know what Airbnb stands for?
Air bed and breakfast.
Yes. Fuck.
Air bed and breakfast.
It stands for air bed and breakfast because the creators essentially they started Airbnb as a bed and breakfast, right? And they just had their own unit, right? And they would have an air bed inside their unit, and that's why there's an air bed and breakfast. Literally,
that's crazy. That is crazy.
I didn't know what the air stood for.
See how the ideas just grow and grow into something unbelievable.
And they were getting some crazy bookings just off like what they marketed so far, right? Because it was like it was a more personal experience compared to
going to a hotel,
right? There's a false misconception that Airbnbs are primarily rented out as like a party house. Once again,
I mean, there's all types of needs, right?
There's all types of needs, but like if you set it up correctly, do your due diligence, you can avoid most of that, most of those kind of bookings, right?
Yeah.
But a big reason to turn like a home into an Airbnb is people often forget that there's always families traveling in and out of the city, right? Whether within the country or outside of the country, right? Just say, for example, imagine this house was an Airbnb, right? And just say somebody within this neighborhood was throwing like a family event, or they're visiting family in this area that lives in this area. Most families don't have enough space to have a guest room. Usually families would rent a hotel room closest to the family's home that they're visiting.
Yes.
So instead of renting a family home, why not rent an entire house or like a unit of a house
for the extra guests?
For the extra guests, or
No, for sure. Yeah. But the only thing I want to add is obviously with Airbnb.
Once I start something. What is it?
Oh, I found the tweet.
Okay.
Wait, finish yourself.
The one thing I want to say with Airbnb, there's also restrictions, right? You do have to look into the laws of where you live. I mean, me and you, we actually were gonna do an Airbnb arbitrage type of thing. We
Speaking
ran into
of
issues.
Business ventures, as we talk about various
Airbnb
business
arbitrage.
ventures.
We'll make a video on that.
But
I
that's
think
another way, right?
Yeah. So well, once again, like you want to make sure you check your zoning bylaws. Is a big thing that we didn't, Vino and I didn't do when we started attempted to start our Airbnb arbitrage business. So definitely look into your local regulations, especially with condominiums. Most I would say a good chunk of condominium boards do not like Airbnbs.
Yeah.
Obviously, there's some people that choose to do it under the table, but I would not recommend it.
I remember doing security downtown in condos, and people do it regardless.
Yeah.
And even though it's technically illegal, right?
Within the condominium laws
Or whatever.
Or their paperwork or fine print.
Yeah. So anyway, I found the tweet. It's a great. So in 2007, Airbnb was an idea.
Yeah.
Right. And this is the first email sent out by, I guess, the founder. So Brian, I thought of a way to make a few bucks, turning our place into designers' bed and breakfast, offering young designers who come into town a place to crash during the 4-day event, complete with wireless internet, a small desk space, sleeping mat, and breakfast each morning. This was in September 22nd, 2007.
That's crazy.
In 2021, Airbnb is worth $107 billion.
Yeah. Apparently, Airbnb is worth more than some of the big hotels. No,
I wouldn't be surprised.
107 billion, right?
107 billion. That's a big market cap.
Either they're bigger than the biggest hotel company, or they're bigger than a few of the biggest hotel companies combined, something like that.
Okay.
Yeah.
We'd
They
have
would
to
be
look into that.
those companies would be like in the bill, like maybe like 20-40 billion.
Yeah.
Just
Why don't we
100
just
billion,
search
right?
up just for the video how much is like Hilton hotels worth?
Okay, yeah. All right, so Hilton Hotels market cap on the New York Stock Exchange is 43.12 billion.
Wow.
So that's
Okay.
half of
There you go.
Airbnb.
Yes.
Marriott is 53 billion.
Okay.
So
okay.
both of them are half of what Airbnb is worth.
Yeah.
Jeez.
Yeah, so it makes sense. That's kind of tends to be the trend, because apparently the biggest taxi company is like Uber.
Yeah.
Fucking
I'm sure
Lyft or
everyone's
whatever.
seen those.
Well,
memes,
you know,
right?
that's
Yeah.
so that's kind of why these tech companies are created, because of the total addressable market, or TAM.
Yeah.
So the market is huge, because you're trying to take market share from the taxis, or you're trying to take market share from the hotels.
Yes.
Which is what they did, because you're providing a better alternative.
Yeah.
Right. Your inventory is almost infinite.
Yeah.
Right. And you don't pay for the inventory.
Yeah.
People are putting up their own inventory because there's incentives to rent it out,
Yeah,
right?
exactly.
So
Yeah.
it's genius.
It's
Same,
genius.
same
Yeah.
concept with both.
Yeah.
Right?
Yeah.
The other thing that also followed that same trend is Turo, obviously, right?
Mm-hmm.
Exactly.
You
You
rent
love
out
Turo.
your car, right? So just throwing that out there.
Yeah.
Largest hotel companies by market cap. So yeah, Oriental Land is apparently first.
Wow.
I'm gonna assume that has something to do with China.
Probably in China.
Yeah. Orientals, yeah.
So it goes Marriott, Hilton, Las Vegas Sands, Galaxy Entertainment, MGM Resorts. But yeah, the number one that we know of is Marriott, which is
Okay.
53 billion.
Wow.
But
Okay.
Airbnb is worth 107.
Yeah.
So
Yeah.
there you go.
Double
There you
stuff.
go.
Yeah. Okay. Wow.
All right, and I'm also going to bring it back to just the whole leveraging real estate. So I know Vint asked me earlier.
Yes.
Would I get a condominium if I wanted to get like a single detached, and I only qualify for a condominium?
To get into the market.
Yeah. I was trying to get back into that, because I think there's another beautiful thing with real estate. You can get into a condominium. Like just say you want to get a house, but you only get qualified for a condominium. That doesn't mean that you're priced out of a house forever. You can, if you're looking to get into real estate as something to either hold, like for example, invest in, or move into a condominium to live in. If you're just trying to purchase real estate to live in, if you only qualify for like a condominium or like a townhouse or whatever, if you get priced out and you can only afford a condominium or a townhouse, I would still go with either the condominium or the townhouse, because then you get to take advantage of the equity growth. Right?
Okay.
So it's some people would say, no, you know what, man, I'm just gonna wait and rent and save up money. But
That's
the way,
a great point. Yeah.
the way inflation is going, most incomes are not adjusted to inflation, right? And real estate is one of those primary asset classes that adjusts to inflation. So there's more money being printed. It's another reason for the home prices to go up.
Yes.
Hence what we see in the Toronto market right now, right? There's just one of that's. I'm not saying that's the whole reason why the real estate market is crazy right now, but that's one of the main factors. One of the big factors.
Yeah.
Right. So yeah, I would definitely just to enter into the real estate market, I would get what I can get. I'll literally go for what I can get, just so that I can. It's kind of like a good analogy I would say is it's like taking a boat and going into a stream of fish, right? And holding a bucket in front of the fish. If there's a bunch of fish going through, you're holding your bucket and you're getting bare fish.
Yeah.
Right? That's like holding real estate. Like you're collecting that equity by just participating. Right? Versus trying to save up for that single detached family home that you want to get, right? Like it's going to be a lot more harder to save up for that down payment for the single detached, because the single detached is still going to be going up in price most of the time. If you look at the Toronto market, that's how it's been lately. It's still going to be going up in price. So if you were to just get into like a condominium,
so the way you're saying it is kind of like using it as a stepping stone almost.
Exactly, right? So you could still save up for the single detached, but now you have the equity of your condominium or townhouse
built up
to help to help finance the bigger home that you want. A phrase a realtor hears a lot is, "Hey, well, how's the market?" Right? And the best and the best way to respond to that is which market. There's multiple.
I'm talking about the GTA, obviously.
No, but even within GTA, there's different markets. There's an investment market. There's there's a consumer market, right? So sometimes some
commercial market, industrial market.
Exactly, right? Some people want to invest, right? So investors are going to be purchasing a house differently than an emotional buyer, or like somebody's looking to buy for their family, right? So investors are going to go more number based, and like a family is going to go more based on emotion, right? Like sometimes you might see like a family, and then the mom comes in and she's like, "Oh my god, I need this backsplash to cook my dinner for my family." Right?
I've never seen anything
exactly
like this.
So they might be willing to pay an extra 50,000 over asking on a property, versus an investor, if he's like, "Okay, you know what, me paying 50,000 over isn't going to make sense for my numbers, so fuck this place," right? And you're going to go on to the next one, right? So there's different markets, bro. Just like what I'm saying, it's like, for example, we can kind of predict what's going to happen with the following year based on current market trends and what's happening in terms of development and immigration. So that's why I said, like, if we people who are in the real estate market right now, if they were to get priced out, the more people that get priced out, the higher the other asset class is going to go up. So like the townhouse and the condominiums, because then now there's going to be a higher number of people trying to purchase that just to get involved in real estate. Next time I come, I will have some exact figures for you guys.
That'd be fun.
I guess we can pull up like data from years before. And
But we'll do that. We'll do that for next time. We'll give you like a rough like gist of like what the overall growth in Ontario has been,
based on different real estate,
based assets. On like year to year growth and growth.
Compare. It'd be nice to compare the condo to the townhouse to the semi to the
exactly right. So. But yeah, that's just my thoughts with real estate. I think it's always a good time to get in, and they say the best time to get into real estate is yesterday, right? Because yesterday's price is not today's price.
I hear that a lot.
You hear that a lot, especially these days with inflation.
Exactly. Okay. A lot of people look at real estate like, oh, I want to get into the market because I want to grow my money. Yeah. Right. But the thing is, that might not always be the best case, right?
Yeah, no, for sure.
Right, so like
in terms of like not being able to, you're putting yourself in a bind, basically trying to cover your payments and stuff.
Exactly, right? I would advise those kind of people, there's so many different ways to grow your money.
Yes.
Right?
Yes.
Like my brother, he's actually in the process of buying a house right now. Right? Yeah. And he looks at me and he's like, "Why didn't you buy a house yet?" Right? And everybody has different lifestyles. Everyone has different knowledges, right? And he might only know how to grow your money through real estate. Right? I mean, for me,
and this is also more risk factors that come with real estate. Like, for example, like how we mentioned with the condominiums. If the condominium is looking to do some major upgrades, if they don't have enough reserve funds, you're the one who's going to be coughing that up. Exactly. You're going to be spreading. You're going to be sharing that spread. And another thing, if you buy a house, your house isn't always going to be amazing. You might have a water leak. You might have a roof leak. You might have like different things. Anything can happen. Exactly. Right? Anything can happen. So you have to be in that. You have to be in that space to be able. Like, you have to shield and maintain your investment. It's not just going to be free flowing cash flow, even if you're buying a rental property, for example, right? So yeah, you're right on that. You're right in that sense.
What I want to kind of go into is just like strategy, right? Like you can have one person, like my brother that's getting into real estate. I don't know his exact reason, but just like anyone, like they might be getting into real estate to grow their money. Yeah. Right. You might have another person exactly grow their wealth, right? You might have another person that
because wealth is possible.
So yeah, you might have another person that has enough to get a house, but maybe their strategy is to build their net worth a little bit more before they get into real estate, right? So I just feel like these days a lot of people look at everyone in society and say, okay, why aren't you getting into the real estate market, right? It's like there's so much out there, right? There's so much out there. There's even foreign real estate, right? So
foreign real estate,
honestly, like I just wanted to bring that up because there's a lot of people that look at other people and say, okay, they didn't get into real estate, so they might not be there yet.
Yeah, they might be poor, right?
Exactly.
You know what's crazy? I actually know a very, very, very successful realtor. He's actually one of the most successful in commercial, I believe, in the world. He's actually from Toronto.
Oh, yes. I think I know who you're talking about.
Yes. And he owns no real estate. He owns no real estate.
Right.
He's primarily...
one of the top earners in
he's up there. And he is all in on crypto. Right, so it really depends on where you want to choose to invest and stuff, but I say but I say for the average person, real estate is the well known, and they know it's not a scam.
Exactly.
Right, it's not it's not a scam. It's everybody knows that.
I mean, real estate is, at the end of the day, real estate in somebody who's a millionaire, real estate is kind of like a staple to their portfolio.
Exactly.
Their portfolio of assets.
It's less volatile too. It's more stable.
I don't think there's a millionaire. I mean, there probably is, actually. But for the most part, for the people who it's really great for preserving your wealth.
Yes. I mean, I'm definitely on the same page as you. I would love to park my capital there.
Down the road, but everybody has their own path that they follow.
Yes.
There's if something is working for you, like say your business, you're able to you have a business that's growing rapidly, right? You
might want to scale versus get into real estate.
And you scale and based on that business you pay yourself,
exactly,
and the more you save, the more you save,
the more you earn too.
Is the more you're growing your wealth, right? And then you can take that and then you can put that into real estate, right? So there's so many different ways to grow your wealth.
And even the reverse is true. Like, just say you don't know what you want to do, you could still get into the real estate market, and then you can do a home equity line of credit, a HELOC, and that HELOC could potentially fund the new business plan that you have.
Exactly. That's kind of why I mentioned the HELOC, right? Because a lot of people you want a loan for your business, you got to come with a business plan, this, that, and the third, right? But if you own property, you kind of don't need to justify to the bank. You can pull out hundreds of thousands of dollars. Just to fund your business. No one's asking any questions about it.
But now that you guys are saying that, I do want to clarify. Let's just say someone buys a property, right? How long would they have to wait before they can open a HELOC?
It really depends on your mortgage terms. So some mortgage terms are more flexible. Usually, I want to say it's around the 3 to 5 year mark. Right.
So you gotta look at that. Like the way we've been talking about it, it's almost like some people might think, okay,
you buy it and the next day you go and get it.
But it doesn't work like that.
Right? Like you could potentially refinance it, but usually with those kind of terms,
even a refinance still some time.
But usually, in those kind of terms, with the earlier exit, you're paying higher interest rates. It's more suitable for somebody like a home flipper or like somebody doing the BRRRR strategy. So HELOC and BRRRR strategy, for those of you that don't. If this is a new term for you, we're going to be making a more clear
specific video
on this stuff. If you guys want if you guys put it down in the comment section, whatever we get most of, we'll make that video first, and then we'll make a video of the other one later. And while you're there, also make sure you like and subscribe as well.
Yes,
and
please.
Share the video to whoever you think would find this information useful.
For sure.
Yeah. All three of us kind of went over our thoughts on real estate investing, and what our personal goals were with real estate. Maybe that stuff is going to change based on how much money we're earning, or based on what's going on in the markets. Because once again, we're only saying things that have already happened. We don't know what's going to happen next because nobody has a crystal ball, right? We've also talked about the advantages of investing in real estate, and as where you live or as an investment. Such things as like house hacking to make your mortgage payments cheaper. The advantages of paying for a mortgage versus paying for rent. We're actually going to do a separate video on just the pros and cons of renting versus buying. If you were to house hack, you're still building that equity. You're getting assistance in getting your home paid down. It's also like a nice little stepping stone to help build your wealth into your real estate venture, or it just help building wealth. If you want to grow your money to reinvest into something else, like another asset class or a business, right?
For sure.
Yeah, make sure you guys share the podcast, and make sure you download and
download
subscribe
it so
on all
you have
platforms,
it if you
follow
don't
on
have
all
Wi-Fi or
platforms.
something.
We're actually on Apple Music and
Apple Podcasts.
we're on Apple Podcasts,
Spotify, Google Podcasts.
Yeah. Make sure you guys go
all
and
the
download
podcasts.
that. You guys can like listen to it on your drives. You can listen to it on your walks.
Mm-hmm.
You know, I that's what I tend to usually do. I usually download my podcasts and I'll go for a walk and I'll bump that shit. I don't need to use my data and stuff.
Exactly.
Right? Just
Yeah.
playing it safe.
Yes, sir.
This is going to be a little bit more advanced. Some of you guys might already know about this, but a lot of people don't really know too much about this.
Or even think about it.
And that is multifamily investing, right? So what exactly is multifamily investing?
To my knowledge, multifamily investing is a place that's has more than 4 units for 4 different families. Any place that has more than 4 units. Am I correct?
It's actually
I
more
thought it was
than
5.
It's actually more than 1 unit.
One?
Yeah.
It's actually more than 1.
Yeah, if you have 2 units, it's
Mhm.
multifamily. It's 2
Single
units.
family, multifamily.
Yeah.
Okay.
It's more than 1
So a
unit.
duplex
More
is
than 1
multifamily.
Yeah, a duplex
So
is
technically,
essentially
even a
multifamily.
duplex, triplex.
Yeah.
But I think
You're talking about
commercial
You're
and
talking about
residential.
commercial and residential. Usually, once people get into like a duplex, so duplex, for those of you that don't know, is a 2-unit home. So that can either be upstairs and downstairs. If it's 2 legal units, it's considered a duplex. And then it's a triplex, which is 3 units within a building, right? So usually people start off like that. And once they get a little bit of landlord experience and just tenancy experience, then they would want to scale on to like larger projects. So sometimes people don't really notice this, but when you actually drive around, you can see a lot of them in Scarborough. They're all over the place.
all over.
You'll see like these smaller, lower rise buildings, and they'll have multiple units in it. It's usually kind of ghetto. But a big thing that's happening right now, people buying them, renovating them a little bit nicer just to kind of up the rents. And that's kind of like the whole thing with multifamily. It's more of it's more investor focused. So there's more the markets are completely different.
It's like more of a business, right?
It is a business. You're buying a business. You're essentially buying a business. Sometimes it'll be turnkey. Sometimes you're going to have to do some value adds to either make it profitable or make it a little bit more profitable, right? So it's a little bit of a different structure, but ideally you're coming back to the bare basics, which is to look at what is the price per unit. Right, so you can usually get a better value per unit when you are investing in multifamily. So within Ontario, we have a few main guys, so a few big guys that were brought to light through Matt McKeever's channels. So Matt McKeever, he changed his YouTube channel to the Canadian Real Estate, something like the Canadian Real Estate show or whatever. So
really, I didn't know.
I
that.
didn't even notice that.
Yeah. So you actually changed that over, I guess, to kind of make it a little bit more legit. But yeah. So big shout out to Matt McKeever. We learned a lot of our stuff through his channels.
Sure. That's where we got started.
That's where we got started in terms of real estate investing, right?
Yes.
So one of the places where we got started. So we're gonna definitely put a link down below so you guys can check it out. But yeah, like we have guys like Kyle Ford, Casey Wong. We got
Casey Wong.
Yeah, and Matt McKeever and stuff. Even our own, even our buddy PV Rajan has been getting into multifamily investments
with Jeff
as well, with Jeff Weibo and stuff. So it's nice to see a lot more information coming on that. We intend to bring out some more information on multifamily investing too.
It's kind of crazy because just last year, we flash back to like just summer 2020. Right now it's like December 2021. Just last year, summer 2020. I remember me and Heaven, we would always talk about getting into the real estate market and getting a house and then renting it out and growing money and making money like that. And then he used to tell me that you had conversations with Vint, and he would tell you about this thing about apartments and multifamilies. I used to think like, bro.
Who's this guy?
Yeah, like I was like, yo, I had no idea, right? And it's just crazy. You just don't know what you don't know.
You don't know what you don't know, right? And like
you don't even know what you don't know.
Yeah. And then like if the average person, you see these apartment buildings, you'd be like, this is ghetto. I'd never want to fucking live in one of these. But like going in as an investor,
the opportunity
is amazing.
It's amazing, right?
And it's a win-win situation, right? Like you're not only are you making money, but you're also owning essentially a recession-proof asset class.
Yes.
And you're essentially improving the lifestyle and improving the areas when you go in to these multifamily apartment buildings and making strategic renovations. Like when you make the environment nicer, you're attracting more quality tenants, right? You're making the area a lot nicer because now you have more quality tenants, and you're providing a better living space for the average person.
Yes.
Yeah, don't quote me on this, but I believe in the United States, apartment rents have only gone up in the last like 100 years or something like that.
Really, eh?
I don't know if it's 100 years, but like since like the early 1900s or something. Rents have only gone up.
Really?
In apartment buildings.
Yeah. I would say even the same thing in Toronto, right? The rents have only been going up because I remember, for example, personal experience of ours. So back in the day before my dad would have purchased his first home, we were living in apartments. I think even for you could even relate to this as well. Like we were living in apartments, and the rent that we were paying was a fraction of the rent that they're charging right now, right? Like a lot of the rents. Like I remember we were
paying like $900.
Yeah, you were paying $900. Like, we were probably paying something around there. Like this is back in the day, right? Yeah. Now you're looking at rents for ghetto apartment building, not even the nice ones in Toronto. You're looking at rents more than like my dad had a one of his houses he had was a 1,400 square foot detached in Markham, right? And his mortgage payment was like $1,400 or something. Right now you're looking at like an apartment building that's like not renovated, smells like smoke and piss.
Not even 3 bedroom, probably 2 bedroom.
Probably like a 2 bedroom, like right. And you're looking at rents of
over $2,000.
Over $2,000, right? And yeah, that's that's kind of
it's crazy, right?
Some crazy shit, bro. So it is recession proof. Your rents are pretty much always going to be going up.
That's what I was trying to get on.
Right?
Recession proof.
And once you go in with an investor mindset, you can go in and do some strategic renovations. Once again, like even the renovation that you're doing, it's not the same type of renovation that you're going to be doing with like a regular home. So like for like a regular home, if you go in there and make the kitchen nicer,
the floors,
and the landscaping and all that stuff, you're gonna get higher. You're getting higher dollar for the house by doing the strategic renovations.
But those renovations most times a little bit more costly too, right?
It really depends. It really depends.
Like the cost, the return you're getting on that is probably a little bit less than the return.
It actually could be up there because when you're doing for residential homes, the renovations, you're morely so attracting the emotion in the buyer, right? So you would make it more of a personal and homey feel, so that people would bid for it based on emotion. When it comes to investing in multifamily, because it's more of an investor focused asset class, you're looking to do whatever you can to increase the rents in the building, because increased rent is what's going to produce more money, right? And if you were looking to do like a refinance, you're not going refinance based off how much nicer the bush outside looks. You're going refinance based off how much more rent you're bringing in versus when you first acquired the property. Exactly, right? So just a little example that I have here when it comes to strategic renovations. So because you're working with larger numbers, for my example here, I'm using a 10-unit multifamily apartment building. Okay. Right? So for a 10-unit multifamily apartment building, if you can do strategic renovations to increase the rent by $100, $100 times 10 units, that's $1,000 a month increase just by doing $100 increases in the rent price. Sometimes that can be a strategic renovation. Sometimes that could be
adding an appliance or a new appliance.
Upgrading the appliances. Sometimes it can literally just be correcting the rent because maybe the previous landlord wasn't pricing the previous rent correctly according to market conditions, right? So that's primarily the main thing when it comes to multifamily investing, especially if you're trying to do like the BRRRR strategy. You want to get in there and increase the rent, but obviously you don't want to just be like a slumlord and go in there and increase the rents. You want to provide some sort of value, maybe better appliances, like you said, nicer flooring, nicer paint, just making the overall living experience there a lot nicer, so you can charge
putting in a washing machine,
putting in a washing machine. Exactly. There's a certain amount of legal caps and stuff that you can increase rents on, right? But if you were to provide more value, as in creating, doing the renovations, adding in appliances, then you can kind of amend those rules but everything has to be approved and overseen with like a lawyer and everything. And there's also different strategies where you can literally just cash for keys, right? You can literally just go in there, pay out 1 or 2 months of rent if your tenant is okay with it, and you can literally just pay them out, and they'll just find another spot, and you can just go in there, do a complete renovation, and then
and
you
then
just
the new
have
person comes,
exactly,
and everything's
and
already
you have
changed.
increased rents.
Exactly, right? And then once again, that rent is going to be whatever the market calls for, right?
Okay, makes sense.
Yeah.
Okay.
So yeah, that's a little bit of an introductory to multifamily investing. Obviously, we're going to be making more videos on multifamily investing, and if you guys are watching this, make sure you guys do like and share this video, and
I hope it opens up your mind too, like if you've never heard about it, right? Because that definitely did for us.
Right, because most people, like, they're just fond of the duplexes,
Houses,
triplexes,
condos,
right? Like houses and condos as investments. But you know what, if you have a few houses and condos right now, you might be able to liquidate it, so you might be able to sell that and use that money to get into a multifamily, right? And there's more than enough trainings online, and obviously if you guys subscribe to our page, you're going to be seeing some more video content on multifamily investing, right?
And then obviously tax advantages and
exactly. There's a whole
stuff, right?
there's a whole other 9 yards that we can go with multifamily investing.
Amortization.
Exactly, right?
Okay.
All right. So I know we've been talking about residential. We dived a little bit into the investment sides as well.
Yes.
Now I want to just go completely off the charts. Okay, so I'm gonna switch it up and talk a little bit about commercial real estate, because there's also investments in commercial real estate.
For sure.
Right. So once again, multifamily was commercial real estate, but it's still on more of the residential side. But I mean, like, when I mean commercial real estate in this aspect, I mean like office spaces, like buying office spaces, renting it out
to businesses,
and stuff. Right. So a big thing with commercial real estate is that I know I mentioned this earlier. It's very hard to get commercial real estate information, right? Like, you're not seeing it's very rare that you see any commercial real estate content on YouTube, right? I think one big head is Manny Koshpin, but even that, like, he's not really telling you a lot of stuff, right?
And the other thing is, like, when I look for real estate information or any information, I like to find information based on Canada. That's
exactly.
Canada.
And Canadian based. Like, I there's probably a few channels online. I think Matt McKeever is another good channel with just like an entry level of commercial. But I feel like,
how about office space though, right?
Yeah, office spaces and stuff like that. There's lots of different.
He's not talking about office space.
He's not, right? And like, I want to take on the onus of kind of getting more down into the whole office space and commercial, into the commercial investment space, or even as a commercial tenant, because it's very different from a residential tenancy or a residential ownership, right? And your client is also a lot different too. So it's a whole different world, and there isn't much information on it. So that, once again, like I mentioned, that's why I want to kind of take care of that and kind of
do our part too.
Because there's just one thing that I learned is, especially over the years, being an entrepreneur is looked up to. Back in the day, being an entrepreneur was like, yo, what do you mean you're not working a 9 to 5? Are you?
Yes.
Right. But like,
these days everybody wants to be.
Exactly. Yeah. Everybody wants everybody wants to be an entrepreneur, and like, a lot of people, because it's still fairly a new space. Yeah. A lot of people don't really know that, hey, you know what, this e-commerce business that I'm doing, it might be more profitable for me to get a commercial unit, like an industrial space, to do my logistics and stuff, like to have my inventory and ship it out and stuff. You don't even know that yet, right? Because everything is at its infancy. Even if you're like a chef, for example, you grew your social media page, you've been creating content or whatever for chef-like material. Maybe you're profitable enough or bigger enough to invest into like a restaurant because you have that much of a following. And I know a few local guys in the Tamil community have actually opened up own restaurants and stuff. Like,
once the demand is there,
exactly, right? I think we have Foods in the Six. We have Foods in the Six, and I think recently I seen Kitchen Gorilla opened up like a
he makes sauces and stuff.
He makes sauces, but he I think he does like a bunch of stuff, right? But he has like a gelato. He opened up like a very, very nice gelato restaurant recently, right? So I think it's in our due diligence to kind of show the steps on how to do that. We're going to be doing that in future episodes too, where we're actually going to be interviewing Foods in the Six and whatnot over here, just to kind of explain what he was going through and some of the steps that he went through to lease out his first commercial unit, right? So that he can conduct his business there, right? So I think it's very important to kind of have that information out right now, especially with the trends that's happening with the whole entrepreneur scene,
and owning your own business and everything, right?
Yeah, exactly. I got a question for you guys.
Yes.
Do you guys know what lead means in commercial real estate. So I'm going to spell it out for you. I don't mean like generating a lead. I mean lead. So the acronym for lead is LEED. Okay, and I know you're like probably like, what the fuck? Like what is this guy talking about?
Never heard of it. Yeah.
Right.
Never heard of it.
I'm gonna give you guys a little bit of a hint, and I'm gonna tell you what it stands for. Let me see if you guys can kind of guess. So LEED stands for leadership in energy and environmental design.
All I can think of is something to do with solar panels.
Okay. So
That's
you
all
think
that
some
comes to
sort of
my head.
environmental thing, like
Yeah.
Okay.
Design something.
I honestly, I have no idea, bro.
When it comes to commercial.
When it comes to commercial leadership and engineering design.
Leadership in energy and environmental design. Leadership in energy and environmental design.
I guess like the most energy efficient properties. I don't know.
You're pretty much there.
Does it have anything to do with some sort of like board of directors or anything?
No. I think Vince kind of hit the nail in the coffin there. But
okay.
You know what? I'll get into it. Then we can kind of play a little bit more of these these pros and cons games. Right?
Yeah.
So LEED is a nationally recognized green certification program that uses best in-class strategies to ensure a building is eco-friendly and promises to provide a healthier place to work. Okay, so it's kind of like one of those like newer, modern, eco-friendly commercial units.
I guess it has to do with like the sunlight coming in, the air quality, and all that kind of stuff.
Yes, right. And like what kind of energy, using energy efficient
for the heating system,
exactly, energy efficient, exactly.
So I'm assuming these. I kind of see where you're going with this. I'm assuming these units command a premium in rents.
You're gonna wait and find out, man. All right. So the whole point of LEED is to create a healthy, highly efficient, and cost-saving building. But do you guys know how this could be beneficial when selecting a commercial unit? I mean, I guess
utilities, right?
Well, maybe if you have a building with higher standards and it's more environmentally friendly and has a better quality of air systems or whatever, maybe your productivity for your employees might be better. Maybe they might not get as sick as much or something like that.
Yeah, you got there. Yeah.
What about saving on your utility bills?
That's a good
right
one.
If you have more
lower expenses
upgraded
on that, right?
Yes,
equipment or whatever, you might have less gas costs,
like energy efficient
less
water heaters
costs.
or something. Right?
Yeah. Well, there's actually multiple factors. I'm actually going to go over all of them right now. But before we get into it, there's actually different rating systems.
Okay.
There's actually it's actually a green building rating system.
Okay.
And there's different levels. There's silver, gold, and platinum, and it's like a point system. And based off the criteria, if it falls under the category, there's a different level of demand for it, right?
Okay.
So something that a lot of people don't even think of is financing. It's cool to learn about commercial investing, but financing is where you got to start. Whether you go with residential or commercial, right? You can be like, hey, I want a single family home detached, but you might only qualify
mortgage, right?
You might not even qualify, right? Based off your income and your credit rating, you might even only qualify for like a condo, right? So just like that, you still got to qualify for commercial. So with the LEED commercial buildings, there's better financing because lenders will feel more reassured because the building is up to date. Because it's more of like a new and modern thing. So usually these buildings are more up to date and to code with the current standards.
I see.
Right? So the thing with commercial too, bro, there's a lot more regulation and stuff too, right? So like just say you were to buy an old commercial building, just to change it from its previous use to its current intended use, there's a lot of regulations. You got to go with bylaws. You might have to change zoning bylaws and stuff. And you're gonna have to make specific changes to the unit, and it's the upfront cost when you make those changes can be pretty expensive, right? And then based off that, then there's like lending and all that stuff. Lending has to approve all that, but with a newer building that's already up to date, you have a better chance.
They're more comfortable
with it because
right?
it's not like it has like older wiring or whatever that doesn't qualify for insurance, right?
Okay.
Another thing is obviously you guys are kind of already guessed this as well, because it's an eco-friendly and more of a modern and up-to-date commercial unit. You have a higher chance of tenancy, so you have more tenants that would want to rent out that type of unit, right? Another reason why there's going to be more tenants as well is because the utility costs will be lower, because once again, it's eco-friendly. So the overall operational cost for the tenants will be lower. And going back to it, more tenants usually equals higher rental rates and less vacancies, right? So that's another thing with commercial real estate too, is that vacancy is also a problem too. Like, you get more long-term clients, like just say like you built a building that would work for Best Buy, right? If Best Buy is going to be coming in, more than likely Best Buy is going to be there like for many years, unless they go out of business or they choose to move for whatever reason, right? So if you were to sign a lease with like Best Buy or like some other bigger company, you're looking at a long-term rental, right? But just say, for example, for whatever reason, if Best Buy leaves, you're not gonna get like food basics in there right away. You might, but you know, depending,
you might have to do changes to the building. Like, it's
exactly, because of the use is being changed, or
is that like a zoning thing too, or no?
It's a combination of zoning, and it's also a combination of what the company also wants in terms of square footage, how high of ceilings they need. Like, it's different things that go into it. So it's a very tedious it's a very tedious thing. It's very like
it's very meticulous.
So if like for example, if Best Buy leaves, you need another company in the same industry as Best Buy to come in. Otherwise, it becomes difficult.
Or no, not necessarily. Like, it's just there's usually a longer vacancy period, right? Because it's not
many companies can come in and just do what they got to do with the building like that. They might have to make changes before they want to. So then they might not want to do that at all.
Exactly, right? And like, even like a bigger e-commerce company can't just come in there and be like, hey, you know what, we're gonna start doing our truck transporting and stuff directly from here and stuff, right? But like, because of how many truck ports they have, or like the bay and or like the way the traffic and stuff is gonna work around that mall strip or whatever, it might not work with what the other company is trying to do, right? So there's a lot more regulations, a lot more longer periods of vacancy that you go through. But it's I would say this is like a very, very higher level of investing, right? I would say it's beyond multifamily.
So I guess one thing you can say is, like, let's say you want to invest in building a commercial building. You might want to build a building that can easily be used for multiple different types of businesses. Am I correct?
Yeah. So like, there's different kinds of retail and commercial buildings out there. Well, we're gonna go more into that in like another video. But yeah, there's multiple different classes and stuff, and sometimes you can even build for these companies ahead of time, right? With like contracts and stuff in place, right? Yeah, so just going back to the whole saves energy. Once again, like I mentioned, the lower operating costs. Like, which company is not going to be I'm not gonna want that
for sure.
And another thing, it's also eco-friendly, and being eco-friendly, it's like, obviously, like,
it's probably good with the government, this and that.
Like, rebates, like, you gotta, like, once again, like, it is something that's I don't want to use the word trendy, but it is like, it is very sought after these days, right? Especially with like how the planet has been going over the last few years.
Talking about commercial, and they might even be using that for marketing purposes.
Whatever, like, just say, like, for example, just say it's like a company that's eco-friendly. It would make sense for them to get an eco-friendly office as well, right?
Exactly.
Right. And another thing is the work environment. The work environment is also big as well. So there's a large focus on health of the occupant. So like, a lot of people will be happy to work there. It's designed in a way where it puts the employee's health as a priority as well. And that's good for, like, just bigger companies overall, and just like, keeping your employees happy.
Exactly.
It's more of like
more productivity.
Exactly. Right? Exactly. Right. There's a lot of other benefits and stuff that come with it. So yeah, that's the
lead for you.
That's the lead.
Okay.
I did not know that. That was very interesting.
For sure. Yeah. Right. I mean, like you said, there's not a lot of information on commercial, right? So even us, we're still learning, right? Maybe one day we'll get into commercial investing as well, right?
Which is cool to know that we have pretty much almost unlimited asset classes to invest in, right? Like, we in just like how we have so many different ways to make money out here, there's so many different investments that you can get into, right? And a lot of things is like, if you don't know, you don't even know that you don't know it. But yeah, like, that's the one thing that with the commercial, there's lots of different types of commercial units. The whole commercial market has its own market in and of itself, right? So yeah, man, there's so much different ways of going about and stretching out your money, right?
It's definitely interesting.
Yeah. All right, guys, that's pretty much wraps up the episode for today. This was a little bit of an introduction to commercial real estate,
multifamily,
and multifamily, and just real estate in general, right? I think
we learned about LEED.
We learned about LEED, and some of you guys might have learned about many other things, right?
Yes, sir.
So if you guys want to know, if you guys want to learn more about real estate, if you literally whatever you guys want to learn about, just
whatever
leave it down
topics, just let us know.
Whatever you guys want us to make a video about, leave it down in the comment section below. The whole point we do all this is to provide you guys value and just kind of make your life easier, right? Because some of you guys might have questions, some of you guys might watch the show and you'll find out new opportunities that you didn't even know existed, right? And maybe that works best for your lifestyle and whatever you're interested in, right?
Yeah.
But yeah, that's pretty much our concludes our episode for our first real estate episode on the Wealth is Possible podcast. Make sure you guys check us out on Spotify. You guys can download our episodes so you guys can listen to us on the go. We're also on Twitter, where we have all of our Twitter pages down below. We're on Instagram. You guys can click all those links down below. If you guys
YouTube,
you're on YouTube. Yeah, we're on we're all over the place. We're everywhere, right? So you guys can get the
wherever
links
you consume your content, we're there.
Yeah, exactly. So you guys can get all that down below. And while you're down there, make sure you guys do like it. Share with your friend that you think would be interested in this kind of content.
Share with your squad that you're learning real estate about.
Whoever you want to level up.
Yeah, exactly. Right, and make sure you guys subscribe, hit the bell notification button so you guys know exactly when we drop all our content, because we have a lot more where that came from, brother.
And tune in next week where we go a little deeper into the stock market with the third episode, I believe, right?
Third part of the stock market.
Third part of the stock market.
Oh, damn.
Where we'll be talking about investing checklists and whether or not you should invest in a company based on what to look for.
Yeah.
All right.
Super interesting. So I'm definitely excited for that.
All right.
Alrighty, guys. Yeah. Thank you so much. Take it easy.
Peace. Sandeep.